Sean, come on up, and you're going to give us the national update first, and then he's going to talk about something else. Nationally, what we try to do on a national basis is talk about a different area. This may be the area for you, it may not, but we want to highlight different areas. Sean, what are you going to talk about tonight?
Well, really, I was going to talk about Philly and Pittsburgh, but on my way over, I just gotten the brand new Office of Federal Housing and Enterprise Oversight report that came out about a month ago. And as I was reading through it, I thought, this is exactly what these people want to hear. I mean, I'd like to tell you about Philly and stuff, but I think that shifting to the national perspective and giving you exactly what's going on in the hot markets is probably what you really want to hear.
Good.
So normally I don't work from notes. I try to have an understanding of exactly what I've got going on, but since I took these notes on the way over, I'm going to refer to this, so apologize for that. Big winner right now is Utah. Utah's appreciated 17% in the last year, and the biggest thing to note is that in the last quarter, they appreciated 2.77% for the entire state. And the significance of that is that only two other states, it was Montana and North Dakota, appreciated greater than 2%. The average state was appreciating only 0.5%, so they're considerably higher than most. Salt Lake and Provo appreciated 19% in the last year, and that's just something to keep an eye on. We've been looking at properties in both Provo and Salt Lake. We have an advisor up there named John Hunter, and the properties up there have been appreciating quite well for us. But it's nice to see that the data, the historic data is going back and supporting the places these guys are going into. Ogden and then Grand Junction, Colorado, which is, right on the border of Utah out there, both appreciated 16% last year. So looking at the overall map of the United States, if you look at the Northwest, Washington, Oregon, Montana, Wyoming, and Idaho, they all appreciated 10 to 12% in the last year, and the quarterly appreciation is still pretty strong in most of those states. So if you're looking for some kind of appreciation, if you want to dive into something that has got the inertia behind it right now, looking in the Northwest is not such a bad idea. I was surprised to see that Boise is actually still doing pretty well, because we went into Boise in 2005 and actually made quite a bit of appreciation there, and we thought that things were tapering off. We quit buying up there just because the rent-to-sales price ratio was getting a little out of hand, but for those that are up there, it's definitely a state to be holding in. So another good area, and my favorite area right now, which is the Gulf Opportunity Zone that he was bringing up, the GoZoneProjects.com. I'm definitely interested in taking a look at that site. The Gulf states and the Carolinas both appreciated between 7 and 9%. But the biggest thing to look at are some of the ones that are right on the Gulf area. Biloxi and Gulfport, where is it right here, 15% appreciation last year. And it's not just last year. The year before that, they appreciated at 16%, and the year before that, it was 13%. So they've had a really strong, steady appreciation, and there's a lot of room in Biloxi. You got to realize that 80,000 rental units were wiped out during the Katrina and all the other hurricanes that are going on down there. So there's a lot of opportunity. There's a lot of need for housing down there. Combining that with the demise of the subprime market and also having some problems with the investor-grade loans, the supply of these rental properties in those markets is just dismal. So you've got to expect these rental rates. I mean, if you're looking at doing cash flow, and that's what we're going to do here in just a little bit, is go through how to really calculate your cash flow on a rental property, then what we want to do is take a look at what your rent rate is today and where it's going. Because I think that rent rates in the next year or two are going to go up probably 20%. And 20% is a big number, but when you look at it, we're talking about, rents that are in the $750 to 1,100 range, and they're going to go up about $100. I mean, we've already seen rents in Las Vegas go up about $100 in the last year, 18 months. So I expect that we're going to start seeing some real pain on that, and it's going to be real hard. If you're a renter, and I don't think there's too many out here, but if you are a renter, you might want to be locking in a long-term lease because the rates are going to start skyrocketing. And just so you have a baseline, I could have given this at the beginning, but the United States itself last year appreciated 4.25%, and the last quarter was 0.5%. Markets of note that you might want to be paying attention to. We have Florida is presented today, and Nashville will be presented a little bit later. Florida market went up 4% last year, but you got to note that in the last quarter they dropped 0.75%. That's the second biggest drop in the United States, second to California, which dropped about roughly just shy of 1%. Realize, though, that these condotel properties are not, this is residential that we're talking about here. And condotel properties are not residential. It's a whole different thing. It's more, it's not necessarily commercial, but the appreciation that's based on that is you do a different kind of appraisal on that, and you're looking for what the hotel rates are doing when they're going up and down. So don't not look at Florida and these condotel projects and then say, hey, the appreciation was only 4% or whatever. You've got the shortage of hotels there, especially around the theme parks, is huge. And then Tennessee up 7%, so they definitely outpaced the United States. They were up just shy 0.75% for the quarter. And Las Vegas, we already talked about California being the biggest loser. So that is the national perspective. If you want to talk to me afterwards, I've got the report, and I'm not going to take this home with me, so if somebody wants to come up and grab it, you can have it.